Hey, I got a question for you. Should the Caribbean focus more on USA, Europe, or China? So, where should we focus on? The COVID 19 pandemic has shown us that the world is changing. So, if you want to know more what we should focus on and you have an opinion on that, join me in this episode, okay? Hey, welcome to the Data Analysis and Policy Show, the show where we turn data into analysis so that you can create the right policy. And we are right from Willemstad, Caribbean, Curacao, and we are having this show for you every Friday around 4 o'clock. So I want to ask you a question. Should we focus now on China? Should we focus on USA or should we focus on Europe? As you know, right now, the Caribbean is very, very dependent on USA for its tourists. So a lot of stayover tourists, they come from the United States and countries like Aruba, countries like Curacao, countries like St. Martin, they are very, very dependent on stayover tourists from the United States. Now, if you know what is happening right now in the United States, and I'm going to show you exactly that in this episode, and also Europe, and also China, then it might be a good time to diversify, to move away from one of those economies. Okay, if you are receiving a lot of tourists from United States and the United States is in a big contraction, economy going down, people are in debt, the debt is growing, the money is being printed, people are losing their jobs, the unemployment is going up. If that is the situation, then there are not going to be any tourists coming to your beautiful Caribbean island during the next few months. And as we don't know exactly how long this COVID pandemic is going to take, because we don't have a vaccine yet, we don't know how long this is going to last. So if your economy is very focused on tourism in the Caribbean, then listen to me. Listen to this episode and just ask questions if you don't know everything. I don't know everything, but ask questions if you have any questions. So if you're looking at this in a replay, just ask questions below and I will be answering the questions. So what do you think? Should we focus on United States? Should we focus on Europe? Should we focus on China? Now, as an economist, and if you have been following me, you know that I always based my economic analysis on data. So what are one of the data sources? One of the data sources are the newspapers, the online media. And as a policy advisor, as a researcher in the Caribbean, maybe you are part of the Ministry of Finance, maybe you are part of a central bank, maybe you are part of a Ministry of Economic Development, maybe you are part of a Ministry of Tourism. You are in the Caribbean and you want to get the latest data. So my tip today is that you need to follow the right channels. You need to have a data source. You need to have a data source that gives you the right information. Okay, that's the first part, the data. The data is very important, but the data is not only the data in your spreadsheet. The data is not only the data that you have collected in all kinds of reports. The data is also the daily news that's coming to you. Okay? So A lot of times I hear we don't have data, we don't have information, but you have all the information. We live in a beautiful world. Well, if you know what information sources you need to follow to make the right decisions, then you already have half of the thing done that you need to be done. Okay, so how does it relate to this episode? How it relates is I'm going to show you 3 sources so that you can make your decision. If you're head of the department or head of the policy department you are in, if they ask you, should we focus on China, on USA, on Europe, I'm going to give you something today so that you can start writing your analysis. You can start doing your analysis, okay? So I'm going to show you 3 sources that can help you answer that question, okay? So the first question, the first source, and let me share my screen with you, because when I share my screen, boom, I'm here, and you're going to see, what are you going to see? You're going to see that I received the second quarter GDP of the United States. The second quarter of the GDP, the gross domestic product, that's the whole economy of the United States. So every quarter there is a projection, or there's a realization, the best realization of what the economy is doing. Look at this, the worst ever contraction. So the decrease, 32.9% decrease of the second quarter. That's the worst ever. That's the biggest dive ever of the United States economy. So this is an article I want you to, I will just cut this article and put it into the show notes of this show. But you will see, let's read about it. United States economy suffered its worst period ever since of 33%. So let me ask you this. If the economy is contracting, going down with 3% almost, do you think people have enough money to be traveling to Caribbean? Do you think that? Now, it is neither the Great Depression nor the Great Recession nor any other in the past 2 centuries have caused so much sharp drain on the economy. This means that the USA economy is really, really in trouble right now. They are in trouble, and in this report, you're going to see this. Now, look at this jump. Look at this. So these are economic, the economy during the past, I think, 200 years. And I look at what is they going to do. This is the peak. This is a dive down there, 32%. So even down here in 1921, it was not this much. Okay? So in 2008 maybe, around here, you see that dip? That dip over there? That was the global recession in 2008. So we are in big trouble. Houston, we have a problem. Okay? So if you are a Caribbean island and you are depending fully on the United States, then probably the season of tourism will not be a good season. And also, I want to share with you that if you open your borders to the United States, that means that COVID pandemic can come to you, come to your island, and I don't know if your health system is capable of helping 1,000 people with COVID. You see, so this is a big problem. Now, I know that Aruba, for instance, Aruba opened their borders to the United States, and right away you saw that there were more people with COVID, okay? Because the incidence of COVID in the United States is one of the highest in the world, okay? So look at this. This is a report. It is open for everybody, and this report is telling you a story And this story is actually that it's not going to be good in the United States for the next years. It's not going to, although it might recover, but it's not going to be a V-shaped recovery. Okay, V-shaped means it's going like going down, going up. Okay, and then you have the L shape. L shape is like going down and staying down. And then you have the U shape. The U shape is like going down and then coming up. Okay, so look at the unemployment claims. That's another indicator that people are looking at. All these unemployed people, they cannot travel to the Caribbean. Okay, so that's the situation with the United States. Look at this for yourself. You need to be able to check what is happening with your trading partner, with the biggest economy in the world. But China is the second biggest economy in the world. So look at this. It's not going to be good. Okay, so that was United States. Okay, so based on this, what is your analysis? Your analysis is that United States is in big debt. Okay, when people are in big debt, they can't pay their debt. I'm not going to say that the United States can go bankrupt like this, but there are people around the world who are saying, okay, the debt to GDP, so the debt compared to the economy from the United States is just like a undeveloped country. So there are countries in Africa who have the same debt per GDP ratio as the United States. The only reason that the United States is able to be a power in the world is because, of course, they have the military and they have the currency, the dollar, which is used by everybody. But this means that you can, as a Caribbean island, you can diversify away. I'm not saying go away, don't focus on the United States tourists, but this is serious thing that if you want to eat the next months, if you want to eat the next maybe 2 years, you might want to look at other sectors, okay? At other source markets. So now let's look at Europe. Okay, we saw the 33% in United States decrease. Let's look at Europe. So now I'm going to look at Europe and I'm going to change the Eurozone. You see, that's another source. So this source is the businessinsider.com. Businessinsider.com is for investments, for investors, etc. People looking at their stocks, etc., etc. So in here, that's a good source. In here, you see that Eurozone GDP strengths with 12.1%. So it's not 33%, but it is 12.1%, and it is the fastest since the Eurozone existence. It's the worst since the Eurozone existence. So either you go to United States, which is 33%, or Europe, 12.1%. Decrease of the economy. Look at this. This is the president of the I think she's the president of the central bank, European Central Bank, was from the IMF before, Mrs. Lagarde. And look at this. Just let's look at the highlights. Eurozone GDP fell by 12.1% in the second quarter, its biggest decline in the history. This is a significant higher than the Eurozone's Q1 quarter 1 GDP contraction. So it went January, February, March, it went like minus 3.6%, and then April, May, June, it went down to 12%. 12.1%. That's like huge. What does it mean? It means if you have like a income, the total income of the economy of 100 euros. Now you have like 84 point, let's say 84, yes, it's 88. So instead of having 100 euro, it contracted with 12%. So it's like 88 percent, 88 euro. So you just lost 12 euros. You lost 12 euros. That can be a huge. I mean, if it's a contraction of 1%, it used to be 1%, maybe 2%. 2%, you are already in a big recession. This is a global depression. Europe is in a depression. Okay? So, of course, not all the countries in Europe are contracting with this. We, on Curacao, we are dependent on the Netherlands market, and the Netherlands is a very strong economy. If you look at the figures of the richest countries in Europe, the Netherlands is, I think, in the top 5. You see? So depending on what country in Europe you are focused on, maybe you are in Martinique and you are dependent on France. You see, France. Or maybe you are more dependent on the German market. Maybe you are Dominican Republic in the Caribbean and you are more dependent on the German market. Curacao more dependent on the Netherlands and maybe German market. So, but the Europe as a whole, 12%. So Spain is the worst hit country, suffered 18.5%. So even the 12%, that's the general of the whole European Eurozone, but it can mean that some countries are worse than that 12%. And Spain is one of the worst. So what did they do? You see here that the European Union produced an 860 billion recovery fund. Now, what does this recovery fund mean? It is ultimately this recovery fund. Let me just go to back to you. So this recovery fund means that ultimately they are going to print money. They print euros. It's not like printing euros, but the central bank is actually financing this recovery fund. So even in Europe, it means that, I mean, the governments don't just can create money, like they don't have those money on their budget. They are either running a deficit with their budget, some of them, most of them, Spain for sure, and then now they have this recovery fund and everybody is thinking, okay, this recovery fund is going to help us, but what is actually being done is that money is created. It is like quantitative easing, which that's what they call it. The Fed of the United States called it quantitative easing, but actually it means printing money. Now, if you are printing money and you are sending a lot of money to the world and you are spending money, you are giving people, you're giving businesses money, currency actually, you're giving them currency so that they can pay their employees, and you're thinking like, hey, we are supporting you and there's nothing happening. What is going to happen? The GDP, the economy is going to contract with 12%, and then there is more money. So there's more money for less goods, because the goods are the economy, the goods are contracting. So what you're going to actually have is inflation. You're going to get a lot of more money in the economy for less goods and services. 12% less goods and services, more money. It means that all that money is going to be chasing fewer products, and that means it's going to be inflation later. So later on, I'm going to tell you, later on, don't tell me I did not tell you. If you have euros, it means that there's going to be higher inflation, maybe after this COVID pandemic, or even in 2021 or 2022, there's going to be higher inflation. And higher inflation means that the purchasing power of people are going to decrease. Okay, so Europe is also not in good shape. Europe is in bad shape. Now, I'm not going to link too much with what is going to happen, what is happening with the stock market, but just giving you a brief thing about the profit, the stock market. Now, if they are printing a lot of money, then that money is going to flow away to the stock market. So if you're seeing stock markets going high, etc., it doesn't mean that everything is cool, because it can mean that those stocks are inflated with the money that has been created. Okay? And also you see gold. Gold has peaked. Gold has gone through a level this week. I think this week or the past week, because that money is going also to gold. Okay? So it is not good shape. Now let's look at the last one. The last one is China. So we have 33% going for United States, minus 33. We have minus 12% for Europe. And now we're going to China. I cannot speak Chinese, but let's go to China. Let's go to China. And now I'm going to show you China. So I've put this other source, again, marketsbusinessinsider.com, and I've put this source of China. Now look at China. What's happening? Chinese economy looks set for a much vaunted V-shaped economy. So China is going like this. Boom. Going down, going up. You see? So China is rebounding quicker than Europe and also United States. So Chinese economy, while the rest of the world lags behind. And then they tell you why. You understand? They tell you why. So let's look at the highlights again. China looks to be on a course of a V shape, so dropping fast, but going up fast. Economic recovery from its coronavirus. Growing 11% in the second quarter of 2020 compared to the first. So look at that. While Europe is decreasing 12%, while United States is decreasing 33%, China is growing. So now people would say this started already with China and then China is ahead, but look at what they're talking. They're talking that they expect China's GDP to fall only by 1.2% in 2020. Okay? So if you look at the overall economy, they expect it to only drop with 1.2%. So 1.2% is a lot for, minus 1.2% is a lot for China, but it is actually a small recession overall. So China is the only major economy that will see a V shape. Two economists told them. Okay, so the main reason they're saying China's potential GDP, so the potential growth, is much higher than other countries, and that is because China has because China is actually still developing their economy. So it's the world's second largest economy, but they are not a developed economy. They are, I think they are not seen as a developed economy. China is not in the OECD. So United States, most European countries are in there, but China is not in there. So the potential output is much higher than advanced economy. You see, China is not an advanced economy, and the potential output. So Chinese is close. The potential output is 6%, while the advanced economy are 1.5%. So what does it mean? What does it mean? It means actually that China can grow much faster. China can grow like 6%, the potentially, while the other economies are growing around 1.5. Okay? So this tells you that China has a much, much, much brighter future than the other economies. So let's look at my screen again, and then I want to show you, it has to do with the demographics of China. It has to do with the demographics, and so this is basically what they are expecting. So they're talking a little bit of about the U.S. So this is a double dip. This means that it's going down, going up, and going down again. And then also that's the story basically on China. Okay, so now I want to close, and I want to close by showing you, want to show you how you can link with me. Okay, how can you link with me? Take a look at the following. All right, so how did you find this? How do you think it? So I want to ask you a couple of questions. If you want to link with me, just link with me. If you have any questions regarding whether the Caribbean should focus on United States, Europe, or China, I want to know your opinion below. Share this, of course, with everybody. Share this. If you are looking at this on LinkedIn, on Facebook, on YouTube, share this. And then I'm going to put all those 3 links in there. Now, I have one last thing to tell you. So I'm preparing for a very, very, very great reopening of my program. And also, there's going to be a free experience where we will go dive deeper in these kind of things. This experience will maybe be 1 week, and it is a free experience. But if you want to join this experience, you need to get my cheat sheet. And if you go to CaribbeanStrategicBoardroom.com/waitlist, you will grab that cheat sheet with indicators. And right now we have indicators in there, and those indicators are the indicators you need to focus on. But I'm thinking about adding more to that cheat sheet. I'm thinking about adding more information in that cheat sheet. For instance, a list of the ranking of the Caribbean islands in terms of GDP, in terms of population, in terms of everything. So I'm thinking about adding certain things to that cheat sheet, the second tab, so that you will see a ranking of the Caribbean. You see a ranking of the Caribbean islands in terms of exports, in terms of imports, in terms of using fuel, in terms of population, in terms of income per capita. Okay, so you need to go and grab that cheat sheet right now, because when you are on that list, I will be inviting you for this free experience. And this free experience, you will be really enjoying this during 1 week with other people. Okay, so I want to share this episode, and I want you to focus on what is going to happen in the world, because ultimately it is about your wealth. It is about the wealth of your people. If you are a policy advisor, a researcher in the Caribbean, etc., you are trying to help your ministry. You are trying to create policies that help the Caribbean people diversify. I think today I gave you a lot where to focus on. I know where I'm focused on. I'm focusing on. Yeah? Ni hao. I'm focusing on China. I'm focusing on China because in the top 100 of the multinationals, there are many Chinese and Asian multinationals. Okay, the top 10 biggest banks, they are mostly Chinese. The top manufacturers are mostly Chinese. So you have to work with China. You have to digitally work with China. You have to be in the value chain of China. But that is for another episode, because I'm not going to talk only about the macroeconomy, but I also want to talk about the mesoeconomy, which is like the sectors, and also the microeconomy. We can follow certain companies and learn from that. We can gather data, look at analysis, and then that's going to help us in the Caribbean. So if you enjoyed this one, I want you to just share this episode. I'm a little bit blunt, but I'm saying, we should focus on other areas. We should focus on other things. And if you are an American, if you are one of my American friends, I mean, I'm sorry, but I'm looking at the people in the Caribbean, and I'm just looking at, okay, how can we advise, how we can diversify these economies, etc. So share this episode with everybody. Look at the screens, look at the links in the description, and then see you next time, next week. Same time, same place. Okay, same time, same place. See you. Bye.